Ladies and gentlemen, welcome to the earnings call of August 5th for AMD. Oh my gosh. So, I am not personally an AMD shareholder. I'm a large NVIDIA shareholder, but this is still such an important moment to hear about the state of semi chips. I want to hear about AMD's GPUs. We're going to learn a lot about that, but not just for AMD, because obviously, as investors, we're trying to constantly learn about new investments. We are also covering so many other companies that will be releasing earnings today as well. So we have a very wide range, probably the largest day of earnings that I'm excited about. And I actually personally don't have any share in any of these businesses. That being said, we are going to be talking about every last one of these companies. So strap in. It's going to be a lot of fun. Opendoor, SMCI, Upstart, AMD. This will be the big one today, okay? But this is the actual earnings call that we'll be listening to. We can only really pick one. Yes, there are some earnings that start at 4:30. We can decide as a group if that's maybe the direction that we want to go down. But aside from that, this is going to be a fun one. So let's strap in. Let's get ready for the earnings release, and we'll make sure that we get the numbers for you guys as quickly as possible and see if we can make some money, okay? Let's see in chat what company you guys are most excited for. I assume it's going to be 90% AMD, but just in case you're here for SMCI, Upstart, Opendoor, Copang, Cirrus Logic, Rivian, Zeta, Snapchat, Lucid, Revolve Group, Klaviyo. I don't care what it is, okay? We're here to hopefully see that retail investors make some frickin' money. Now, like I said, I don't have many bets out today for these companies, but AMD is the one. Are they going to be an advanced money destroyer or an advanced money duplicator? That is the bet. AMD long, AMD short. Let's see. Yeah, Shift 4, pretty cool. I know. I had my freaking Shift 4 hat ready to go, and then they went down 16.6%. So that is not what we're doing today. Although I actually didn't hate their earnings at all. It was quite exciting, actually. Still big belief in the company. This morning's earnings were not what Wall Street wanted to see. That's perfectly fine. Is this in Canadian dollars or US dollars? What do you mean? This is in US dollars. These are American companies. These American companies trade in American dollars. AMD at 175, Upstart at 82, SMCI at 57, Opendoor at $2.50. Let's get ready. Finance of America. That's what it is. Hide that. Yeah, I know. And MD, our resident Shift 4 enjoyer in chat. Lucky to see him here and still be alive. Yeah, barely breathing. No, brother, I understand. But let's make sure that we get ready for these earnings. So I want to pull up some pages, make sure we have their investor relations open. We're on their earnings call, and we'll have the earnings out as soon as everyone else. So, well, not as soon as Bloomberg, because I'm not paying 30,000 US dollars to see earnings a couple minutes earlier. But AMD, if this loads, is expecting $8.27 billion. Sorry. No. Why is this being weird? Let me go to another report. And let me make sure that I have X up and their call up. And then we can check Outlook and get ready for the call. Oh, wow. The buzz on AMD on X is going crazy. There's a lot of money out here. Very exciting. Expecting $7.43 billion. That's correct. And then $8.3 billion for Q3. That is what the market is expecting for revenue. Okay, AMD has beat earnings expectations for 10 straight quarters. What do you guys think is going to happen here? I can't wait for the commentary on the need for chips. I think it's going to help out NVIDIA. Maybe we should put that up on the screen as well. We'll load AMD here, and let's load NVIDIA so then we can see them. They'll be on the screen here. We'll track them. Although they're slightly down intraday, that doesn't necessarily conclude that we are going to be down in after hours. That's in 10 minutes, ladies and gentlemen. Call starts at 5 p.m., so 1 hour from now. In that hour time frame, however, there is going to be more than enough content that we need to cover. So that will be very, very exciting. Let's get some earnings updates on each of these companies before we end up seeing the numbers, so we know what to expect and to see if they end up beating. For AMD, like I said, $7.43 billion is the revenue estimate, with 48 cents is the EPS consensus across Wall Street. Okay, I also want to take a look at SMCI, which is expecting 44 cents of EPS and 5.9 billion in revenue. And then the other big one that I want to check out, obviously Upstart's going to catch some people's interest today as well, but Upstart is another very interesting one. I play with a lot of fintech stocks and different lenders, and so Upstart is going to be a very interesting one to see if they're seeing a lot of demand. Not only that, but guidance into Q3. So many people might know me by investing in SoFi stock, for example. Well, Upstart is a very good indicator for how strong the loan platform business is. Personal loans, home loans, the types of products that they have intertwined quite a lot. So very interested to see what they have to say about guidance, and that'll help my stocks or hurt them. But as retail investors, all I'm looking for is more transparency, and then I can make those decisions on my own if I want to continue to hold or trim or whatever. But I'm here to learn. I'm not well-versed in really any of these companies. Obviously, the largest position that I have in my portfolio is NVIDIA, so I'm happy to see AMD do very well and say that the market overall, the demand is not slowing, these sort of comments. And maybe it's time that I start building out an AMD position and actually try to diversify across many GPU providers. So, I'm just here to learn and hopefully see Lisa Su end up showing off that they have an unbelievable business here, great demand for their products, and that they continue to push forward. So very, very excited to see that. Will I cover Upstart earnings? 100%. Now, I don't know if we'll get around to the actual call today. I'll be listening to the call myself for sure, but we will be going through the numbers and probably their report for at least 10 minutes or so during this to make sure that we have all the numbers. Shift 4 thoughts. Nothing wrong in my opinion. I think that they're actually doing very well. Taylor actually seems very confident that Global Blue was a very successful acquisition, and considering it's probably their most expensive acquisition, that's very important to me. So, what's your opinion on NVIDIA after AMD earnings? Well, I'll have to see, but I do think that they'll trade a little bit in tandem. If AMD does well and they say demand is strong, you're going to see the exact market reaction happen with NVIDIA. It doesn't mean that if AMD is doing well, that they're taking market share away from NVIDIA. We don't know that per se. Maybe we can see that in the earnings call whenever we're listening to Lisa Su, if she has some things to say about that in terms of taking market share away from big players. Like if she says anything from, taking away from the market leader or something like this, then we know that those are direct impacts to NVIDIA. Okay. But if she ends up coming out and just saying, hey, the market for GPUs right now is hotter than, even the most bullish analysts could ever have predicted. We sort of saw that across Amazon, Microsoft, Meta, not Meta per se, but their CapEx spend increased on the bottom end of the range, went from 64 billion to 66. They kept the top range at 72 billion. But all the other ones, Google raised their CapEx spend for the full year from 75 billion to 85 billion. They said a lot of that's going into AI. don't worry about this little drop right now in the stock, okay? Unless there was leaked earnings, which there isn't based on the fluctuation and the volume that we're seeing. But the market's not closed, so these are just jitters going into the close. But it's too early for me to tell how I feel about Nvidia, considering I don't have any information on AMD's earnings quite yet. All in AMD. You know what? I don't think that I'm not a fan for going all in on positions, and I do appreciate diversification. But if there was a segment that I would be comfortable going all in on and think that is a educated bet, it would be artificial intelligence, especially the infrastructure layer right now, just because that's the phase that we're in. All the hyperscalers and every single player is just at a hyper frenzy to try to buy as many chips as possible. The only comment that I might say to that is that there was some commentary from a lot of the hyperscaler names like Amazon and Microsoft that said chips are not really the bottleneck anymore, nearly as much as energy. Okay. So I'll keep very close eye on if AMD sees any sort of slowdown. They're not expecting that. Their guidance is actually saying that they're going to accelerate quite rapidly in their AI chips, but that's what I want to make sure of, is that the demand for chips going forward stays as high as I think that they should, not as high as what Wall Street's expecting. Because if you actually look at the expectations for NVIDIA and AMD, there is a little bit of slowdown versus how much growth is happening these years versus 2026 and 27. But I mean, every single large player had said that they are going to increase the amount of spend year over year. So it's looking like it's going to be a pretty exciting time for 2026 as well. Tanner, did you end up buying PayPal? Not buying PayPal just yet. Waiting a little bit, but yeah, sort of holding steady right now, looking for some pretty obvious buys. Yeah, the Palantir earnings were just insane. Expensive company, but oh my gosh. You put up numbers like that, like I don't think there was a single analyst that was talking about valuation yesterday. It was just all about how they had the highest expectations going into that quarter, and then it blew away their own expectations. So it's hard to be a sad Palantir shareholder yesterday. That was the most exciting quarter that I think I've covered from them. So that was very cool. All right. There was some new talk about OpenAI today with some of their smaller models, which are like open weight models that they can end up distributing at like almost just a single computer level or even smartphone level. It'll be interesting to see what AMD has to say about this, if they think that is a breakthrough moment for them and that they are going to see even more demand here. I don't know. Pretty excited overall. I can't wait to see. We're not on the lows of the day, by the way, for AMD, but yeah, we only have 2 more minutes. So strap in. This is where it gets fun. And I'll try to get you the numbers on literally all of these names. So AMD, Clavio, Revolve, Lucid, Astera Labs, Snapchat, Zeta, Rivian, Cirrus Logic, Arista Networks, Copang, Opendoor, SMCI, and Upstart. Maybe I should refresh those two. I'm going to refresh those to the top. SMCI and Upstart, because I want to keep an eye on those as well. Opendoor, Copang, stuff like this, I don't care too much about, especially Cirrus Logic and stuff. But they still play in the chip sector, and we'll want to see what they end up doing. I mean that specifically for Cirrus Logic, not as much on the Copang e-commerce side. But yeah. Okay, going into the close in the last 60 seconds here, we have Upstart down just slightly on the day. And we are now closing. SMCI closed down 1.7%. NVIDIA down 1%. AMD down 1.4%. Klaviyo down 0.2%. Revolve up 1.2%. Lucid up 0.4%. Not too big of moves today. Large fluctuations. Opendoor up 2.44%, leading as the most bullish company that is going to be reporting earnings out of this list that we are covering. But, ladies and gentlemen, it's now time for earnings. So they don't all come out directly at 4 o'clock, okay? Some jump out at 4, 4:01, 4:05. So we'll get them hopefully a little split up from each other, and we'll try to get that data as quickly as possible. SMCI in the after hours up 1%. That's looking to be the first quick move here, starting to jump back. Maybe we don't have earnings. Maybe it's just jitters. Let's keep an eye out on that. What else do we have here? Cirrus Logic up 6%. That's definitely earnings. Cirrus Logic up 6%, 7.5%. That one has been quite the sold off. This used to be a very like Wall Street darling of a company. In the last year, now down 7%. But running into the close here, let's see if we can get some earnings out. I don't have any numbers yet. If anyone gets any numbers, let me know. AMD up just slightly. These look like just earning jitters. Lucid up 0.8%. Cirrus Logic's definitely the first one out, up 7%. Wow. That is the first one, but I think we are going to see huge swings this earnings season. So far, that's been the case. You're either up 10% or you are down 10%. So it's going to be an explosive day, that's for sure. So far, up 7 on the first name that looks like it's reported. I don't have any numbers yet. And I'll keep checking. AMD still just flat in the after hours. I should also check when they're expecting to release numbers. It's expected at 4:15, actually. AMD expected to come out much later. 4:15 for AMD, but that'll allow us to enjoy some of these earnings before we see their numbers. Opendoor flat. Cirrus Logic now up only 5.7%. Only 5.7%. Still very positive. SMCI slightly up. And now let's see if we have some updated numbers. Skyworks Solutions, which is actually not a name on this list right now. I was going to add it. I should have. EPS up 7%, or beat on up by 10% year over year, beat by 7%, $1.33 over $1.24 expected. Revenue beat by 3%. Revenue came in at $965 million, expected $941 million. Amgen came in at a double beat, 14% on EPS, $6.02 over $5.28 expected, and even revenue came in beating over 3%. Let's hope that these numbers keep coming in. Those are the only two that I have so far. No details other than that. Revolve Group. Wow. Spiking up as high as 6% and right back down. That is just incredible. Let's see what happens there. Everything else. So Rivian down 4%. That's probably a spike on earnings here. Opendoor up 1%. Cirrus Logic up 5.7%. Still Upstart now starting to spike up. This is my expectation, is that they do well on earnings. They have shown off that they, like, doing channel checks on Upstart has shown that their guidance is looking very excitable. Okay. Very, very exciting there. So I'm hoping for great things. That spells great news for SoFi investors, which I am definitely one of them. So far, they're spiking up. Could be good news for the market for purchasers of personal loans. We'll track that here in a second. But I have Rivian numbers. which we see Rivian missing by 24% on EPS, and revenue beating by just 1%. So 1.3 billion on revenue, essentially flat. Okay. Revenue is up 13% year over year. EPS up 34% year over year, but down 100% quarter over quarter. Missing by 24%. Stock is down in the after hours, down 3.3%. Cirrus Logic up 4.7% still as investors are handling this number. Upstart up 11%. SMCI down 11%. Guys, I'm telling you, the lenders are where you have to be right now. The market understands that rate cuts are coming, and so selling loans is going to be really big because people want to front run those sales. Okay, if rates are about to get cut, if you end up purchasing loans today, you're getting a better rate than what you would be getting after the rate actually gets cut. Okay, because then you'd have to pay more for a loan that's better priced than what you could get at a risk-free rate. So, Upstart, we don't have the numbers yet, but it's looking very promising from market reactions. SMCI up or down 11.5%. Now, that doesn't necessarily spell bad news for AMD. SMCI might be having their own challenges right now, as maybe they're not the preferred partner anymore for the likes of NVIDIA, for example, as they choose HP or Dell more often. Maybe they are just sort of sidelining SMCI a little bit harder than maybe investors would like. Upstart, wow, up 11%. I want the numbers. Let's go right to their investor relations. We're going to have to go through that deck at some point. That's going to be one of the most exciting names to look for. Klaviyo up 7.5%. The reason why I follow this company just so slightly is that they actually have had a recent partnership and an equity stake from Shopify, which is also one of the largest companies that I hold on my portfolio. So if there's more e-commerce, movements with Klaviyo, if there's that sort of data that we end up getting, that spells very good news for one of my biggest long-term plays. Zeta Global up 2.2%, 3% now, looking like they potentially got some good earnings as well. So let's go through. Arista Networks spiking up as they potentially just got earnings. Wow. Up 7 now. I told you it's going to be explosive earnings today. Holy crap. Upstart numbers are out. Revenue beat by 14%, $58 million, and EPS beat by 44%. 44% to 36 cents of EPS. 25 cents was the expectation. Now listen to this. It gets better. Revenue is up 102% year over year, and EPS is up 312% year over year. Small base. I get it. But that's the thing about Upstart, is everyone gave them a rashy bunch of crap back whenever, the market sort of dried up for loan sales, and people said, like, it was Upstart's fault. It wasn't at all. They are completely held to how the market is doing. So if they get a very good market like this, where they're able to acquire loans, find customers for those loans, sell them off to their banking partners, and they can get better and better rates on those at higher automated conversion rates, meaning that there's no human involvement in offering a loan, then the stock is going to run. Toast. Do we have Toast on this list? Let's add Toast really quick. Toast up 6.8%. This is a restaurant, and now they're starting to get into stadiums and hospitality and stuff like this, but they are a point of sale terminal. Actually goes sort of hand in hand as competitors against Shift4. Shift4 just opened up today, down 16%. Toast looking to be up 7% in the after hours. So wow, Upstart, something came out in the numbers people turned sour on. Wow. This is probably on the press release. They probably put out guidance, or someone might have left. Maybe the CEO stepped down. That's the only way that I see like something turns around that hard. Holy crap. From up 11 to down 12. That's a 22% swing in like that. So this is some sort of company related announcement that isn't seen on Bloomberg terminals immediately. I'm going through their presser right now. So far, everything looks good. Originations up 154%. Loans are climbing. By the way, guys, AMD does not break out earnings for another 5 minutes. So AMD is going to come out with their earnings in 5 minutes, and then the call comes out at 5. Okay? The expected time that they release their thing is at 4:15 Eastern Standard Time. That's 5 minutes from now. So we have a little bit of time to talk about these other names. I'm trying to figure out what has happened to Upstart here. I'm going through. Net income looks good. Adjusted EBITDA looks good. Let's check out their outlook, because that could be a problem. Automated loans at an all-time high, 92%. It's looking really good so far. Personal loan originations, auto loan originations, an all-time high. Home loan originations, all-time high. What is the market taking in right now? It has to be outlook. Does anyone have this? Does anyone have the Upstart numbers? SMCI also down 10%. I have those numbers here as well. Let's go through those. I also have what happened to Upstart here as well, but let's get through some of these other names. Also, Upstart, Open Door, down 5%, starting to recover. Only down 4 now, it looks like. But wow, we were down nearly 18% at one point. They had missed EPS by 33% and beat on revenue. Okay, revenue is only up 4% year over year. But let's get to SMCI before AMD ends up dropping here in the next couple minutes. We'll be able to do SMCI, Upstart, and a couple other names here. Astera Labs up 10%. Snapchat down 14.8%. Oh my gosh, there's so many earnings. Okay, this is fun. SMCI revenue up 7% year over year. Adjusted EBITDA or adjusted EPS of 41 cents. Expected 44 cents. Okay, so that was down 24%. Not so good. Guidance looked pretty strong on revenue at 33 billion with 30 billion expected, but EPS was expected to be roughly 56 cents. But they actually just came out and said it's going to be roughly around 46 cents. Not so good. Okay, so that's a big miss there, 10-cent miss. Net income was down 34% year over year. Gross margins, 9.5%, down 70 bips year over year. CEO commentary. Let's see here. We made solid progress in full year 2025 by growing our AI solution leadership in neoclouds, CSPs, enterprise, and sovereign entities, which fueled our 47% annual growth. Our new data center building block solution, DCBBS, offers exceptional value to customers seeking fast data center deployment. We're on track to grow more large-scale data center customers from 4 in fiscal year 2025 to 6 to 8 in full year 2026. The market does not give a crap. Show us the numbers today. Let us know what you're doing later on. Astera, where's Astera Labs? Up 10%. Revenue came in at 192 million, expected 180 million, up 150% year over year. Adjusted EPS came in at 44 cents, 11 cents expected. That's a 300+% beat. That's insane. Wow. We're deepening NVIDIA collaboration with NVLink ecosystem and hyperscaler scale-up networks. Hosted webinar on Ultra Accelerator Link, UA Link, as an open memory semantic fabric standard. Very cool. Snapchat, their guidance was pretty weak. People are not liking the guidance right now. So hopefully we get some more Snapchat information here. But I'm trying to find out what went wrong with Upstart. Down 10%. Adjusted, it could be adjusted EPS. That came in at negative 17 cents when the expectation was 24 cents. but loan originations were up 159% year over year. Conversion rate was up. Revenue from fees up. Contribution profit up 85%. Contribution margin of 58%. This is quite a swing. I don't see what they're seeing just yet. A year ago, you saw the first signs that Upstart was returning to growth mode, and today you can see that it's in full bloom. We reached GAAP profitability a quarter sooner than expected, and our newer businesses actually accelerated off their amazing growth in the first quarter. Sounds good to me. Oh, let's check out AMD. It is 4:15. We should have the numbers. Yep. EPS in line, 48 cents expected. 48 cents is what we got. That's down 30% year over year. However, revenue beat by 3%, 7.68 billion versus the 7.43 billion expected. So it's so far, I don't have much of the commentary from Lisa Su or guidance or anything along those lines. Just on these numbers, it doesn't look bad. It doesn't look like a smashing beat. But we'll have to see more from AMD and see if we can get some commentary from Lisa Su here in the next minute or so. Trying to get some more Snapchat details here as well. Snapchat came in line or expected on revenue, miss on adjusted EPS. Monthly active users are 7% higher year over year. Daily active users up 9% year over year. Guidance was meh. And the CEO just had this to say before we jump back over to AMD, starting to run now up over 1.6%. Our global community continues to grow in Q2, reaching 932 million monthly active users as we continue to invest in AI and augmented reality. Insane. That's too many users. We're excited about the opportunity to translate improved advertiser performance into top-line acceleration. Well, guidance should have been a little bit more exciting than that, in my opinion. But the market also not too happy with Snapchat down 15%. But back to AMD, as we're up 1.5%, $177 per share. Let's see here. Zeta Global, by the way, the revenue beat by 4%. So you guys are up 5.8% for the Zeta investors. AMD starting to really run. Wow. Up 2%. NVIDIA trying to, take a little bit of advantage on that news, but we're only up 2% on NVIDIA. AMD now up 2.9%. Let's see if we can get a little bit more details on AMD and also make sure that we are ready for the call whenever it comes out. Up 1.5% still, $177 a share. Let's go. People are excited in chat. Okay. I have their slide presentation as well, so we can see their segment level data, unless I can see it actually released here, which is just a little bit easier for me to read it. But if not, we can go through the deck here in a minute and get a bigger breakout. Now, remember, we have some time between now and whenever the actual earnings call is out, which is at 5 o'clock. Okay, so we have about 40 minutes to really understand these companies' numbers. I don't know AMD nearly as well as I know NVIDIA, but I'm here to learn. No updates on AMD's quarter just yet. Wow. $7.7 billion of revenue, up 32% year over year. Gross margin on a non-GAAP basis for this quarter was 43% versus last year of 53%. Operating income came in on a non-GAAP basis of $900 million, with last year coming in at $1.3 billion. Diluted EPS of 48 cents, which was actually in line with expectations at 48 cents. but was 69 cents last year as well, year over year. Gross margin of 40%, operating expenses was roughly 42% of revenue. That's much lower than it was last year, actually down 2 percentage points. And $872 million of net income. On a breakdown of segment level growth, okay, data centers did $3.24 billion in revenue. Client and gaming, $3.6 billion with operating income of $767 million. Operating income for data centers was actually at a loss of $155 million. And then embedded came in at $824 million, operating income of $275 million. Data center revenue this quarter was down 12% quarter over quarter and down 117% quarter over quarter as well, down 121% year over year because it was in a negative. The market's reaction, bringing it back down to 175, pretty flat, now turning negative on the day. Well, actually, that's more like it. Don't want the highs of the day impacting what we actually see in the numbers here. Just really quickly, Astera Labs up 15%, Snapchat down 15%, Zeta up 4%, Rivian down 4%, Cirrus Logic up 5.6%, Arista Networks up 12%, Copang down 1%, Opendoor down 11.5%. Wow. I told you guys it was going to be all double digits this quarter. I mean, it's insane, the market's reaction to earnings this season. Toast. What the heck happened to Toast? We were up 7, and now we're down 9. It's falling further. We're down 9. We're down 10. I don't have Toast numbers just yet. Let's go ahead and take another look. AMD. Okay, we have some CEO commentary now. We delivered strong revenue growth in the second quarter, led by record server and PC processor sales. We achieved 32% year-over-year revenue growth and generated record free cash flow this quarter, reflecting our disciplined execution. That is for AMD, flat in after hours right now, 0.2% positive. Data centers up 14% year over year. Client and gaming up 69% year over year, and embedded down 4% year over year. Non-GAAP gross margins of 54%. Free cash flow of $1.18 billion, a record for the quarter. Non-GAAP operating income of $897 million, down 27% year over year. AMD starting to fall. NVIDIA also falling with this news. They're both down roughly, AMD down roughly 1%, NVIDIA down 0.4%. I would hate to see the advanced money duplicator turn into the advanced money destroyer. But the main part also why I wanted to be live for AMD is not so that I can read a report. I want to hear what Wall Street has to say on the earnings call. Okay, that's going to be one of the biggest parts in is hearing what Lisa Su has to say about the future of this business. That's going to be a massive part here. Okay. Arista Networks, by the way, killed it. Whereas Arista Networks up 12.5%. Guidance looked great. Revenue beat expectations, 2.2 billion versus 2.1 expected. Adjusted EPS of 73 cents. The expectation was 65 cents. Another beat there. Our customers are decisively standardized on our best of breed platform to bring transformational innovation. Non-GAAP operating income crossed $1 billion for the first time, showing strong demand in disciplined scale. Love it. Zeta Global up 2%. Klaviyo up 12.3%. I'm interested to see if that has any impact on Shopify. Yeah, just slightly 0.3%. Toast down 4 now. That was quite an unbelievable. Like the swings here are crazy. Toast up 7 to down 10. Upstart was up 10 to down 12, 13%. You know? AMD down 4. AMD down 4. SMCI down 15.5%. Upstart down 13%. It is red, bro. It's not everyone. There are names putting up huge numbers here, but it is selective on these names. Wow, wow, wow. Let's see if we can't get some commentary possibly on the numbers that we end up seeing here from AMD. That would be just but yeah, it is down. I cannot wait to see what Lisa Su has to say. That's going to, like, honestly, we've seen quarters where they've come out and completely switched around what investors were seeing during the after hours. Just taking in the numbers doesn't mean everything, right? We need to see if those relationships are strong with customers, if they're expecting more deals into the future. Down 3.3% now, hopefully trying to recover here. Klaviyo up 11.7%. Revolve flat on the day. Lucid down 6. Astera Labs up 12. Snapchat down 14.4%. Rivian down 4. Cirrus Logic up 5. Arista Networks up 11.4%. Copang flat. Open Door down 12. I mean, guys, we said it was going to be explosive. And what did we end up getting? A lot of people happy about this. I'm happy for the AMD crash. Is it a buy the dip type of moment here? Even Nvidia taking a hit on this, down 7%. Or sorry, 0.7%. Relax, don't. The messenger had a little bit of a slip up here. Toast, by the way, really quickly, Toast seeing massive swing. This is just crazy. Up 8 to down 10 to now down 2. That's an insane chart. EPS came in at 13 cents. 22 cents was expected. They just slightly beat on revenue at 1.55 billion versus 1.52 billion expected. Q3 guidance had adjusted subscription and fintech gross profit at 470 million, up 25% year over year, and adjusted EBITDA of 145 million. Annualized recurring revenue came in at 1.9 billion, up 31% year over year. Net new locations just hit a brand new record of 8,500 new records or new locations, new records to 148,000 restaurants. Okay, that's up 24% year over year. And their total gross payment volume is up to 23% year over year, reaching nearly $50 billion in total payment volume. That's exactly what Shift 4 ended up showing off at just over 50 billion for the quarter this morning. That stock actually ended up being down 15.4% on the day because they ended up showing off earnings in the morning. So big sell-off. Okay. Let's get back to these other names here. Upstart down 11, SMCI down. Man, it's still dropping. AMD still dropping. No, dude. I want the chip names to do well. I really do. But I don't know if the data center revenue and the operating income on the data center segment was nearly as high as what people were expecting. The growth in their data center segment was primarily driven by growth in AMD EPYC CPU revenue and share gains across cloud and enterprise customers. That's nice. That's very exciting. Decline was primarily due to the inventory and related charges associated with UX export restrictions. Epic CPU revenue. Yeah. They launched, we already know about all this. The IM350 series, they had Sam Altman come out and do a nice thing during their, call. That was a lot of fun to watch. But really, we're still looking at a very strong client and gaming segment for AMD for their Ryzen chips. That did very well. Client up $2.5 billion, to $2.5 billion, up $1 billion year over year, and gaming to $1.1 billion. That nearly doubled as well, bringing the total to $3.6 billion. And operating margin went from 8% to 21%. That killed it this quarter. Driven by record client CPU sales and strong demand in our Radeon GPUs and console gaming products. And operating income was driven by richer client product mix and operating leverage on higher revenue. Outlook for Q3, 54% gross margins. 8.7 billion plus or minus 300 million. So they could do 9 billion next quarter for full like revenue overall next quarter. They did 7.6 to nearly 7.7 billion this quarter. That's an insane jump up. And that's what people are really betting on. It's barely even this quarter. It's mainly where it's headed into the future. Let's see what else we see here. So just to put it into perspective once again, okay, their revenue ended up beating by 3.5%, AMD. They beat on data center estimates by 0.8%. They beat on gross profit margin by about 20 basis points to 43%. Okay. They missed on EPS it depends on the Wall Street estimates that you're looking at. Some say they missed by roughly a penny. Others say it was perfectly in line, and what they were actually expecting was 48 cents. I'm seeing mixed reactions here. Next quarter guidance beat estimates by 4.6%. And the 54% gross profit margin guidance missed just slightly because the estimate was 54.3%. But if you miss by 0.3%, but yet the revenue guidance beats by 4.6%, that's overall a big beat on next quarter guidance. I would sacrifice 0.3% gross profit margin, which they're looking to probably beat anyway, to rapidly raise revenue guidance by 4.6%. I can't find a strong reason as to why the stock is selling off. I actually thought it was probably more appropriate that it's up 2 to 3%. 15% free cash flow margin. That's up, from 10% quarter over quarter, 8% year over year. $5.7 billion in cash on hand, and that's up 34% year over year, mainly on inventory growth as well. Share count reduction decreased slightly, but still, that's not bad. I don't know if you can call that a terrible quarter. Hinge also ended up, Tinder and Hinge through Match also reported today. That was pretty interesting. Up 12.3%. Wow. Wow. Revenue came essentially in line. EPS came in line. Payers actually down 5% year over year. Revenue per payer up 5%. Guidance was way higher than expected of 915 million. The expectation was 890. Better than expected adjusted operating income for next quarter and operating income margin of 36%. CEO said, we reset culturally, reorganized strategically, and are now building product-first company with urgency and focus. Tinder is doing a global rollout of a double date thing. New Gen Z-focused features, contextual liking, modes, AI-enabled discovery, improved trust via face check, and enhanced bot detection. Hinge revenue is up 25% year over year. Monthly active users up nearly 20%. European expansion users are up 60% year over year. Core discovery and AI algorithms boosted matches by 15%. There's a new $50 million reinvestment plan in the second half of 2025 with product innovation at Tinder, Hinge expansion in Mexico and Brazil. Potentially a new dating app as well. SMCI finding newer lows on today's after hours as well, 16.3%. AMD, I mean, personally, I don't know. I don't know if it deserves to be down 4% on this news at all. That doesn't make much sense to me. Now, like I said, I'm not a shareholder of any of the businesses that are reporting here in after hours, but we can take a look pretty easily at their numbers, and it looks like all the focus is on the quarters to come, and in fact, they increased their guidance for next quarter. So what's the issue here? SMCI is trash, says Mark. I mean, they definitely did themselves a disservice by having those accounting problems, and then whenever they're, I was going to say consulting group. What's the regulatory Ernst & Young, right? What's that called? I want to say accountant. It's not an accountant. It's a auditor. Whenever the third-party auditing agency said, hey, you know what, we have to leave, that kind of hurt SMCI. And then after that happened, it looked like NVIDIA had stopped sort of posting about them publicly, and I think that hurt with their client expansion. I could be wrong. It's not a name that I follow very closely. It's just what I see from a 30,000-foot view. But AMD hopefully starting to recover here, only down 4% now. Actually, potentially even better, 3.9, 3.8%. Let's hopefully see if we can do some recovering here. It'll be a lot on Lisa Su to talk up their future growth and what they have cooking over at Advanced Micro Devices. Let's get ready for this call. I'm going to get the webcast up, and then we will make sure we are ready for whenever that drops. Also, I would like to go through Upstart's numbers. I can't believe they're down 12% now. Like, did anyone give us an answer of what the heck happened? What did they see? Revenue from fees? I'm not seeing anything here, guys. Was it some sort of proceeds from borrowing? Repayment of borrowing? I'm not seeing much. Proceeds from excess stock options? That's not it. Cash and cash equivalents went down just slightly. This is not a problem. Does anyone know what is going on at Upstart? Let me know what you can find. I thought we were going to have a very successful quarter here once it started running. Remember, it ran over 10%. So the algos took the top and bottom line number and ran with it. And then so clearly someone found something deeper, like as if, their CEO ended up retiring or something. I don't know. Oh, Oddity also had a report today as well. Down 22%. Wow. Okay. Match Group up 11. Toast down 3.5. Upstart down 12.5%. SMCI down 16. Nvidia not reported today, but just on the back of AMD news, SMCI news, these other sort of semi plays as well, down 0.6. AMD down 4.3, starting to revert back down to the bottoms here. I mean, we got as low as 165 in this after hours. No one likes to see that, especially whenever we were trading at 178. You know what? Life was a lot easier whenever AMD was trading at 178 not too long ago. What time is the call? We are 19 minutes away from the call. That is going to be at 5 p.m. Eastern Standard Time, where we'll have the call. I cannot wait to hear from the great and powerful Lisa Su. The great and powerful. Trying to find any additional information that I can on Upstart. High expectations and profit taking on Upstart. Yeah, I mean, there's probably profit taking, but the expectations were beat. Like high. There was high expectations. I had high expectations. They crushed expectations. Like they really did dominate. I don't think people they're up 102% year over year on revenue. And next quarter looks like it's going to be strong as well. They got to GAAP profitability a quarter sooner than expected. I don't understand why they're down. And from what I'm reading, not many people online did either. Yeah, they beat like everything. Revenue beat Wall Street expectations. Revenue from like Brian McCormick here ended up putting out a good report talking about what guidance ended up looking like versus what they actually saw. What we ended up seeing was revenue they said was going to come out at 225 million. They got 257. Revenue from fees 241. What they actually saw here, I can pull this up. What they actually saw was 241. Net interest income. They didn't add that one, but contribution margin of 55%. They got 58%. GAAP net income was supposed to still be a loss. They were going to hold off GAAP profitability for one more quarter. That didn't end up happening. Adjusted net revenue was supposed to be 25 million. They got 42.2. Yeah, that's worth selling off 10%. That doesn't make any sense to me. Or 12.5%. Even AMD, I mean, I'm surprised by the move. I don't see how many people would be too upset with AMD from the numbers that they're end up putting out, especially the guidance. I could be wrong. But for the most part, they beat across the board. That's a pretty exciting thing to do as a business, you know? Let's go ahead and get ready for the call. We have that here, so we'll be up and ready to go there. AMD. I'm hoping for a recovery in the stock, and I don't even hold it. I think if AMD gets low enough, you could see me taking a share in AMD as early as like this week if it sells off too much, because like, come on now. Come on. There's not many chances where you end up getting to purchase this company like what we did in April. And from the announcements that we saw in the developments of hyperscalers and new regulations from the Trump administration, the ability to now sell back into China. I mean, these are all very, very exciting pieces for the GPU space, right? I wouldn't venture a bet that that's going to stay down forever. But NVIDIA is a very large position in my portfolio. So what I might actually end up doing is, as NVIDIA gets past that 50% of my portfolio, take those new like trim to stay at that 50% and put that into AMD. So I'd start very small and then build my way up. AMD is no NVIDIA. Well, I mean, I'm clear on that. I mean, there's a difference between a $280 billion company, or even less now because of after hours, and a $4.4 trillion business. However, if the market is wrong in assuming their growth rate into further quarters, that seems like something that I want to take advantage of. You can't hold, like, I don't know. Whenever a total addressable market is this big, you sort of just benefit from the market expanding, let alone if you're taking market share or not. But I have a lot to learn in this business. The good thing is I know the people to talk to in this space. So hopefully we'll have some exciting guests on over the next couple weeks. If I get very interested in AMD during this call, especially if it doesn't explode up and people aren't hearing what I'm hearing, then you guys will know that I'm getting more interested in purchasing it once you start seeing some pretty interesting characters that we will hopefully try to interview, see if AMD is worth a small allocation to start. And that's why you want to be subscribed, because we do interviews from time to time with really smart investors, people that are writing these articles, CEOs sometimes of some of the companies that we're looking to get involved with, Jared Isaacman, Vlad Tenev. There will be more to come, by the way, that I'm not allowed to say just yet. But I'm interviewing a CEO of a company that is a very large company. It'll be the largest company for which I've ever interviewed someone of. But I can't say what it is, because then that would ruin all the fun. Yeah, I won't be able to get Lisa. It's not Lisa Sue. It's not Lisa. Okay, 12 minutes till the call. It's Noto. It's a company a lot bigger than SoFi's. A lot bigger. Did AMD just drop 7%? I mean, it was down for a bit, but yeah, from the swing, it really did look like we were going to have a very successful earnings. That's probably where I think, like, based on just my uninitiated, or I don't follow this company as closely as I should. But whenever a company comes out and they give this good of guidance for next quarter, beating by 4.6% of expectations, which is also way ahead of what they did a year prior, I don't know. That seems pretty exciting to me. I think that the market might just be taking profits here. Klaviyo, by the way, up 14.6%. That's really the thing that I'm realizing. You're either up big or you are down big. Snapchat down 14.7%. Zeta Global up 7.8%. Did we get Zeta numbers yet? Well, I mean, clearly they're out, but did we cover them on this stream? Let's see here. Centrus Energy, by the way, also, we didn't look at that one. That's probably going to be up. It looks like they did quite a large beat here, up 6.6% at one point, nearly 10%. Looks like they also did very well. SMCI, yeah, still poor. Where is Zeta's numbers? Yeah, Zeta beat by revenue by 4%. Sorry, we did cover that. Up 35% year over year. And then the only last thing that I would cover is Upstart down 10. Just doesn't make any sense to me. If we go ahead and just take a quick peek-see at their report here. So overall, I mean, originations came in 154% year over year, revenue up 102%, net income positive, adjusted EBITDA at a 21% margin. The amount of actual dollars that they have originated, insane. 23.9% conversion rate. I've been covering this company a long time. I don't know if they've ever done above 20%. I know like you're seeing in this chart that clearly they haven't, but they go back a lot further than that. Let me see if Fiscal AI potentially has it, because I don't know if they do track conversion rates, but that would be a very interesting one for people to take a look at over time. Yeah, they do have conversion rate. Back in December, it was December 2021, it was 24%. Actually, if you want to go a little bit deeper than that, it was 23.7%. So actually, no. This is not a height just yet. So I don't have the updated quarter here, but we can just go back on Fiscal AI and just show that the conversion rate back in June of 2021 was 24.4%. This is whenever the company was very, very expensive. We're talking like $400 a share. Then this had dropped severely. Their ability to underwrite loans got impacted. They were doing worse than FICO scores. The dollars that banks were giving Upstart just completely dried up. Things got bad for Upstart. They went from a $400 company to like a $20 company, even less. I think they got into the teens. Yeah, they went down to $11.93 at one point. Now we're starting to see a recovery back to 82.62 on our way back to 400, because those results are starting to come back. Now, this doesn't have the latest quarter. I don't think they don't have the, okay, they have the income statement already here, but you can see how things are starting to improve. And into this was also their guidance as well for September, also showing that the growth is going to go even further. So just going back, and remember AMD's call, we will be jumping over to in just a second. So AMD's call starts in 5 or so minutes. All right. But I'm checking out Upstart here, and I'm not understanding why the heck that is down. I'm not understanding why AMD is down. GAAP net income positive, adjusted EBITDA positive. Outlook Q3 of 2025, 280 million of revenue. We just did 257. Maybe that's not the fastest growth that they want quarter over quarter, but full year 2025, they're going to do $1 billion. They're still going to hold up the profitability. I don't get it. It looks fine. Contribution margin 58%. $9 million of GAAP net income, 44 million of adjusted net income. And that's if they don't beat drastically like what they did this quarter. Priced in. What are you guys talking about priced in? You can't just say the term priced in. The stock went up by 10% in the after hours. It was up by 10. And then what, a minute later, it just drops from 10 down to negative 13. What is priced in on that? There's something I'm missing, and I just can't find it in the report. AMD, I don't think that this is priced in either. They, like, Wall Street puts in their expectations and then they beat it. You know? And then whenever you're looking at the multiples of a stock in terms of how much it's trading for, anytime that you can expand or bring up earnings, that it will lower the PE ratios. We're also getting some, like, not the opposite of time, like not time decay, the opposite of time decay. Like, we're getting time improvements here. So the longer you hold a company, the less risky it gets, because the growth that you're expecting actually does come to fruition, and then the guidance also gets bumped. Getting rid of paper hands, well, maybe that's the case, but I don't know. I would expect on good earnings that you end up finding more people that want to trade it, not less. Could be wrong. Could be wrong. A lot of our answers will be left in the call. That's in 4 minutes. Okay. I have the call ready to go. So whenever we're good, we're just going to swap over to the call. Okay, we'll end up taking a listen to that. Right now, it's just music, so no need to play that. But that'll start in the next 3 to 4 minutes. Until then, we've sort of got in all the earnings that we want, at least for now. I want to do a deeper dive into understanding what the heck is going on with Upstart here. Let's see if I can find out what's going on. Because a 4% dip on AMD, I'm not understanding, but a up 10% to down 12 is like a crazy move. Yeah, a bunch of people are not understanding this from what I'm seeing. Some people that I very trust in this market is saying the best quarter I've ever seen since covering the company. Expecting commercialization by year end, scaling up new products. Yeah. Mizuho Securities' Dan Dolev came out, said that the quarter's looking absolutely great. EPS 2 was strong at 53 million. Q3 guide is upbeat. So why is the stock trading down? Well, people say take rate quarter over quarter decline, even though Dan Dolev thinks that it is still positive, but could be take rate on their loans, which is interesting because SoFi's take rate went up 100 bips year over year. Not even year over year. In just the last couple of quarters, it's gone up every single quarter since they've had the loan platform business. Just goes to show you the strength of SoFi versus other businesses that I cover here. But as for AMD, let's get ready for the call. That's in the next 2 minutes or so. Getting ready for that. And yeah, I won't be able to pull up the actual stock price of AMD while the call is playing. Just StreamYard, it's just the way that the software works, has a little bit of technical difficulties. That being said, we will be pulling it up on chat. So as you guys can see, I can pull up comments on chat or from chat onto the screen. If anyone is posting about the stock prices, the move in after hours, I'm going to pull your comments onto the screen to update people on where we are. Now, I'm going to have the screen up as well, so don't just post random prices. That won't be pulled up. I'll be updating it as well, but just in case I miss it, it's always the best way to keep the stream informed of where we're moving. Okay. AMD haters make me love AMD even more. It can definitely help. You feel vindicated whenever your stock actually does what they didn't expect it to do. For sure. Earnings is starting here. Earnings call is starting here in the next minute. So let's get ready for that. Before we do, SMCI starting to hopefully recover from its bottom, is down nearly 17%. Now only down 13, but even saying that is kind of painful. Upstart down 8.9%. Toast, like, what are these fluctuations in the market? This seems like insane trading. Like, what is going on? This happened to multiple companies. AMD up and then severely down, then recovering. Toast up 7, down 10, starting to recover. Upstart up 10, down 14, starting to recover. What is going on? It's insane. Call is starting, ladies and gentlemen. Let's transfer over. A little bit of disclaimers to start off with, but then we'll listen to Lisa Su, their CFO, and then Q&A as well. Enjoy. There it is. Okay.
Introduce to you Matthew Ramsey, VP
And sorry,
Investor
turning up.
Relations and Financial Strategy. Thank you, sir. Please go ahead.
Thank you and welcome to AMD's 2025 second quarter financial results conference call. By now, you should have had the opportunity to review a copy of our earnings press release and the accompanying slides. If you have not had the chance to review these materials, they can be found on the investor relations page of amd.com. We will refer primarily to non-GAAP financial measures during today's call. The full non-GAAP to GAAP reconciliations are available in today's press release and slides posted on our website. Participants in today's conference call are Dr. Lisa Su, our Chair and Chief Executive Officer, and Jean Hu, our Executive Vice President, Chief Financial Officer, and Treasurer. This is a live call and will be replayed via webcast on our website. Before we begin, I would like to note that Jean Hu, Executive Vice President, Chief Financial Officer, and Treasurer, will present at Citi's 2025 Global TMT Conference on Wednesday, September 3rd. And Forrest Norrod, Executive Vice President and General Manager of Data Center Solutions Business Unit, will present at the Goldman Sachs Communacopia and Technology Conference on Monday, September 8th. Today's discussion contains forward-looking statements based on our current beliefs, assumptions, and expectations, speaks only as of today, and as such involves risks and uncertainties that could cause actual results to differ materially from our current expectations. Please refer to the cautionary statement in our press release for more information on factors that could cause actual results to differ materially. With that, I will hand the call over to Lisa.
Thank you, Matt, and good afternoon to all those listening today. We delivered very strong second quarter results, with revenue exceeding the midpoint of guidance as higher EPYC and Ryzen processor sales more than offset headwinds from export controls that impacted Instinct sales. We set records for both EPYC and Ryzen CPU sales, reflecting the broad-based demand for our differentiated high-performance data center, PC, and embedded processors. Second quarter revenue increased 32% year over year to a record $7.7 billion, and we delivered over $1 billion in free cash flow. Excluding the $800 million inventory write-down related to data center AI export controls, gross margin was 54%, marking our sixth consecutive quarter of year-over-year margin expansion, led by a richer product mix. Turning to the segments, data center segment revenue increased 14% year-over-year to $3.2 billion. We saw robust demand across our EPYC portfolio to power cloud and enterprise workloads, and increasingly for emerging AI use cases. In particular, adoption of agentic AI is creating additional demand for general-purpose compute infrastructure, as customers quickly realize that each token generated by a GPU triggers multiple CPU-intensive tasks. Against this backdrop, 5th-gen EPYC Turin shipments ramped significantly, and we had sustained demand for our prior-generation EPYC processors. As a result, we set records for both cloud and enterprise CPU sales, and delivered our 33rd consecutive quarter of year-over-year share gains. In cloud, adoption expanded with the largest hyperscalers as they deployed EPYC to power more of their mission-critical infrastructure, services, and public cloud products. More than 100 new AMD-powered cloud instances launched in the quarter, including multiple Turin instances from Google and Oracle Cloud that deliver up to twice the performance of our previous generation, which were already the industry's highest performing offerings. There are now nearly 1,200 Epic Cloud instances available globally as providers continue expanding both the breadth and regional availability of their AMD offerings. This continued expansion is accelerating enterprise adoption of Epic in the cloud, with deployments growing significantly from the prior quarter as we closed large wins with dozens of large aerospace, streaming, financial services, retail, and energy companies. Epic adoption also grew with telecom customers as providers modernize their infrastructure for next-generation networks. For example, KDDI announced plans to deploy Epic processors to power its 5G virtualized network. And Nokia selected Epic for its cloud platform used by service providers to build, deploy, and manage core network functions. Turning to enterprise on-prem adoption, HPE, Dell, Lenovo, and Supermicro launched 28 new Turin platforms in the quarter that deliver leadership performance, efficiency, and TCO across a wide range of enterprise workloads. Epic enterprise deployments grew significantly from the prior quarter, supported by new wins with large technology, automotive, manufacturing, financial services, and public sector customers. To extend our momentum with SMB and hosted IT service customers, we launched the Epic 4005 series that combine enterprise-grade performance and features in cost-optimized platforms purpose-built for smaller-scale deployments. Turning to HPC, AMD now powers more than one-third of the world's fastest supercomputers, including El Capitan and Frontier, which retain the number 1 and number 2 spots on the latest top 500 list. We also power 12 of the top 20 systems on the Green 500, highlighting the performance per watt advantages of Epic and Instinct for large-scale deployments. Looking ahead, we remain bullish on our server CPU business, driven by durable tailwinds, including growing demand for cloud and on-prem compute, sustained share gains, and the growing investments in general-purpose infrastructure required to enable AI. Turning to our data center AI business, revenue declined year over year as U.S. export restrictions effectively eliminated MI308 sales to China, and we began transitioning to our next-generation MI350 series accelerators. We made solid progress with MI300 and MI325 in the quarter, closing new wins and expanding adoption with Tier 1 customers, next-generation AI cloud providers, and end users. Today, 7 of the top 10 model builders and AI companies use Instinct, underscoring the performance and TCO advantages of our data center AI solutions. We launched our Instinct MI350 series with industry-leading memory bandwidth and capacity and broad adoption across hyperscalers, AI companies, and OEMs. From a competitive standpoint, MI355 matches or exceeds B200 in critical training and inference workloads and delivers comparable performance to GB200 for key workloads at significantly lower cost and complexity. For at-scale inferencing, MI355 delivers up to 40% more tokens per dollar, providing leadership performance and clear TCO advantages. With the MI350 series, we're also expanding our system-level capabilities to support deployments powered by AMD CPUs, GPUs, and NICs. As one example, Oracle is building a 27,000-plus node AI cluster, combining MI355X accelerators, 5th-gen Epic Turin CPUs, and Pollara 400 SmartNICs. We began volume production of the MI350 series ahead of schedule in June and expect a steep production ramp in the second half of the year to support large-scale production deployments with multiple customers. Our sovereign AI engagements accelerated in the quarter as governments around the world adopt AMD technology to build secure AI infrastructure and advance their economies. As one example, we announced a multi-billion-dollar collaboration with Humane to build AI infrastructure powered entirely on AMD CPUs, GPUs, and software. Initial deployments are underway in key regions, and with quarterly expansions planned over the coming years. In addition, we have more than 40 active engagements globally and see significant opportunities to power an increasingly larger portion of national computing centers and sovereign AI initiatives. On the AI software front, we made significant progress this quarter, increasing the performance, improving the usability, and expanding the adoption of ROCm. We announced ROCm 7 with major upgrades across every layer of the stack, delivering more than 3x higher inferencing and training performance compared to our prior generation, and adding support for large-scale training, distributed inference, and lower precision data types. To deepen developer engagement, we introduced nightly ROCm builds and expanded access to instant compute infrastructure, including launching our first developer cloud that provides pre-configured containers for instant access to AMD GPUs. We also expanded native support for ROCm across key frameworks, including VLLM and SGLang, enabling frontier models like Llama 4, Gemma 3, and DeepSeek R1 to launch with day zero AMD support. To accelerate enterprise adoption, we introduced ROCm Enterprise AI, a full-stack platform that integrates seamlessly with existing IT infrastructure and includes everything needed for an enterprise to deploy, manage, and scale AI across their business. Looking ahead, the development of our next-generation MI400 series is progressing rapidly. These are the most advanced GPUs we have ever built, with up to 40 petaflops of FP4 AI performance and 50% more memory bandwidth, and scale-out throughput than the competition. With the MI400 series, we're bringing together everything we've learned across silicon, software, and systems to deliver Helios, a full-stack rack-scale AI platform. Helios is purpose-built for the most demanding AI workloads, with each rack connecting up to 72 GPUs that can operate as a single massive AI accelerator. Helios is expected to deliver up to a 10x generational performance increase for the most advanced frontier models, and we believe it will be the highest performance AI system in the world when it launches. MI400 series development is progressing well towards our planned launch in 2026, with significant interest in large-scale deployments from multiple high-profile customers. To accelerate our development, we have invested significantly to expand our AI software and hardware capabilities, both organically and inorganically, with a number of acquisitions and strategic investments. We strengthened our software stack last quarter with the addition of the Brium and Lemoni teams, building on our acquisitions of Nod.ai, Mipsology, and Silo AI. On the hardware side, we added a world-class rack and data center scale design team in the second quarter with our acquisition of ZT Systems. The ZT team is integrated seamlessly, and they are actively engaging with multiple customers to accelerate deployments of our Helios solutions at scale. We also announced last quarter that Sanmina intends to acquire ZT's US-based manufacturing business, becoming our lead partner for AI rack manufacturing. Turning to the AI regulatory environment, earlier this quarter, we were notified by the Department of Commerce that it is moving forward with the review of our license applications to export MI308 to China. We appreciate the focus the Trump administration is placing on assuring that the U.S. technology remains central to global AI infrastructure, and we expect to resume MI308 shipments as licenses are approved, subject to end customer demand and supply chain readiness. As our licenses are still under review, we are not including any MI308 revenue in our third quarter guidance. Despite that, we expect Instinct revenue to grow year over year in the third quarter, driven by the ramp of MI350 at multiple customers. In client and gaming, segment revenue increased 69% year over year to $3.6 billion, driven by record client CPU sales and strong demand for our semi-custom game console SoCs and Radeon GPUs. Client revenue increased 67% year over year to $2.5 billion, led by record desktop CPU sales. Demand for our latest generation Ryzen 9000 series was strong, especially for our differentiated X3D processors. We delivered record desktop channel CPU sales as Ryzen processors consistently topped the best-selling CPU lists at major global e-tailers throughout the quarter. We also expanded our Zen 5 desktop portfolio with the launch of our latest Threadripper processors that feature up to 96 cores and deliver up to double the performance of the competition in many popular content creation and design workloads. In mobile, demand for AMD-powered notebooks was strong, with sellout growing by a large double-digit percentage year over year. We drove a richer mix of higher ASP mobile parts year over year as we expanded our share in the premium notebook segment, where our Ryzen AI 300 CPUs deliver leadership performance and value for both general purpose and AI workloads. In commercial PCs, Ryzen adoption accelerated as OEM consumption increased more than 25% year over year. We saw strong sell-through for AMD commercial notebooks with Lenovo and HP, and a significant uptick in Dell sales as they ramp availability of their AMD commercial portfolio. We also closed new enterprise wins with Forbes 2000, pharma, tech, automotive, financial services, aerospace, and healthcare companies. We expect to continue growing our commercial client share based on the strength of our product portfolio and expanded breadth of OEM offerings. Looking more broadly, we remain confident we can continue growing client processor revenue ahead of the market over the coming quarters, driven by increased adoption of our desktop and notebook products, growing commercial momentum, and a richer product mix. In gaming, revenue increased 73% year over year to $1.1 billion. Semi-custom revenue increased by a large double-digit percentage year over year as console inventories normalized and our customers began preparing for the holiday season. We announced a new multi-year collaboration with Microsoft for custom chips that will power the next generation of Xbox devices, including consoles, PCs, and handhelds. We also deepened our collaboration with Sony through Project Amethyst, a co-engineering program that will use machine learning to power the next wave of immersive gaming experiences. In PC gaming, demand for our latest generation Radeon 9000 series GPUs was very strong, with desktop GPU sell-through accelerating in the quarter as demand outpaced supply. We launched the Radeon 9600 XT, extending the performance advantages of RDNA 4 to mainstream gamers and delivering a significant uplift in gaming performance, including more than double the ray tracing of our prior generation. As part of our end-to-end AI strategy, we introduced the Radeon AI Pro R9700 GPU for local inferencing, model fine-tuning, and other data-intensive workloads. The R9700 features more memory, full ROCm support, and multi-GPU scalability, enabling advanced AI development and deployment directly on the desktop. Turning to our embedded segment, revenue decreased 4% year over year to $824 million. Demand continues recovering gradually, with sell-through in the second quarter picking up as strength in most markets was offset by a few pockets of softness and inventory reduction actions, largely with industrial customers. We expanded our embedded portfolio with the first production shipments of Spartan UltraScale Plus FPGAs that deliver leadership performance and advanced security for cost-sensitive low-power applications. Adoption of our Versal adaptive SoCs continues expanding in high-end applications, including next-generation robotaxi platforms developed by Bosch in Europe, where Versal serves as a high-performance controller, enabling real-time processing, security, and encryption in fully electric automated vehicles. Looking ahead, we expect improving demand in the test and measurement, communications, and aerospace markets will drive a return to sequential growth in the second half of 2025. Longer term, design win momentum continues to build, tracking ahead of this point last year, and putting us on pace to surpass the record $14 billion in design wins we achieved in 2024. In summary, demand is very strong across our product portfolio, and we are well positioned to deliver significant growth in the second half of the year, led by the steep ramp of MI350 series accelerators and ongoing EPYC and Ryzen share gains. Our server and PC CPU businesses are accelerating, driven by growing demand for high-performance compute, sustained share gains, the strength of our product portfolio, and expanded go-to-market investments. Our embedded and gaming businesses are returning to growth and are well positioned for long-term success, supported by strong design win momentum. And in AI, we are seeing strong adoption of our MI350 series and ROCm 7 as we deliver leadership performance and TCO advantages across a broader range of workloads and ramp deployments with an expanded set of cloud and enterprise customers. Looking ahead, we see a clear path to scaling our AI business to tens of billions of dollars in annual revenue. We are very excited about our next generation MI400 series, which is another giant step forward on our roadmap and has been designed to deliver leadership performance at the chip, server, and rack levels. Customer interest for the MI400 series is very strong, and we are actively engaging with an expanding set of customers to support large-scale deployments in 2026. We are in the early stages of an industry-wide AI transformation that will drive a step function increase in compute demand across all of our markets, positioning us for significant revenue and earnings growth over the coming years. Now I'd like to turn the call over to Jean to provide some additional color on our second quarter results. Jean?
Thank you, Lisa, and good afternoon, everyone. I'll start with a review of our financial results and then provide our outlook for the third quarter of fiscal 2025. We're pleased with our strong second quarter financial results. We delivered a record revenue of $7.7 billion, exceeding the middle point of our guidance, up 32% year-over-year, reflecting strong momentum across our business. Record sales of Ryzen and EPYC processors and higher semi-customer shipment more than offset the impact of the U.S. export controls, restricting MI308 sales to China. Revenue increased 3% sequentially due to strong growth in the client and gaming segment, partially offset by the data center revenue decrease due to export controls. Gross margin was 43%, down 10 points from 53% a year ago. The decrease was due to the $800 million inventory and the related charges associated with the export restrictions. Excluding this charge, non-GAAP gross margin would have been approximately 54%. Operating expenses were approximately $2.4 billion, an increase of 32% year-over-year, as we continue to invest aggressively in go-to-market activities for revenue growth and in R&D to capitalize on significant future AI expansion opportunities. Operating income was $897 million, representing a 12% operating margin compared to $1.3 billion, or 22% a year ago. The decline was primarily due to the inventory and the related charges. Taxes, interest expense, and other totaled $126 million. For the second quarter of 2025, diluted earnings per share were 48 cents compared to 69 cents a year ago. The inventory and the related charges reduced earnings per share by approximately 43 cents. Now turning to our reportable segment, starting with the data center. Data center segment revenue was $3.2 billion, up 14% year-over-year, driven by strong EPYC CPU revenue and share gains across both cloud and enterprise customers. On a sequential basis, data center revenue decreased 12% due to the impact of the export controls on MI308. The data center segment operating loss was $155 million, compared to operating income of $743 million a year ago, or 26% of revenue. The loss was primarily due to the inventory and related charges. Client and gaming segment revenue was $3.6 billion, up 69% year-over-year and 20% sequentially, driven by record client CPU sales and strong demand for our PC and console gaming products. In the client business, revenue was a record of $2.5 billion, up 67% year-over-year, driven by record sales of our Ryzen desktop CPUs and the richer product mix. Gaming revenue rose to $1.1 billion, up 73% year-over-year, reflecting strong demand for our newly launched gaming GPUs and higher semi-customer revenue as inventory has now normalized and customers prepare for the holiday season. Client and gaming segment operating income was $767 million, or 21% of revenue, compared to $166 million, or 8% a year ago, driven by richer client product mix and operating leverage on higher revenue. Embedded segment revenue was $824 million, down 4% year-over-year and flat sequentially, as embedded end market demand remains mixed. Embedded segment operating income was $275 million, or 33% of revenue, compared to $345 million, or 40% a year ago. The decline in operating income was primarily due to product mix. Before I review the balance sheet and the cash flow, as a reminder, we closed the acquisition of ZT Systems early in the second quarter, as we had announced our intent to divest the ZT manufacturing business. The financial results of the ZT manufacturing business are reported separately in our financial statement as discontinued operations and are excluded from our non-GAAP financials. Subsequently, in May, we entered into agreement with the Sanmina Corporation to sell the ZT manufacturing business for $3 billion in cash and stock, inclusive of contingent payment. The transaction is expected to close near the end of 2025, subject to regulatory approvals and the customary closing conditions. Turning to the balance sheet and the cash flow. During the quarter, we generated $1.5 billion in cash from operating activities of continuing operations, and the free cash flow was a record of $1.2 billion. We returned $478 million to shareholders through share repurchase, resulting in $1.2 billion in share repurchases for the first half of 2025. In May, our board of directors approved an additional $6 billion authorization. Exiting the quarter, we have $9.5 billion remaining under our share repurchase program. At the end of the quarter, cash equivalents, and short-term investment were $5.9 billion. Our long-term debt was $3.2 billion. During the quarter, we paid down $950 million of commercial paper used to finance the ZT Systems acquisition close. Now turning to our third quarter 2025 outlook. Please note that our third quarter outlook does not include any revenue from AMD Instinct MI308 shipment to China, as our license applications are currently under review by the U.S. government. For the third quarter of 2025, we expect revenue to be approximately $8.7 billion, plus or minus $300 million. The midpoint of our guidance represents approximately 28% year-over-year revenue growth, driven by strong double-digit growth in our client and gaming and the data center segments. Sequentially, we expect revenue to grow by approximately 13%, driven by strong double-digit growth in the data center segment with the ramp of our AMD Instinct MI350 series GPU products. Modest growth in our client gaming segment, with the client revenue increasing and the gaming revenue to be flattish, and our embedded segment revenue to return to growth. In addition, we expect third quarter non-GAAP gross margin to be approximately 54%, and we expect non-GAAP operating expenses to be approximately $2.55 billion. We expect net interest and other expenses to be a gain of approximately $10 million. We expect our non-GAAP effective tax rate to be 13%, and diluted share count is expected to be approximately 1.63 billion shares. In closing, we executed very well in the first half of the year, delivering record revenue and building strong momentum for growth in the second half. The strategic investment we're making positions us to capitalize on the expanding AI opportunities across all our end markets, driving sustainable long-term revenue growth and earnings expansion for compelling value creation. With that, I'll turn it back to Matt for the Q&A session.
Operator, will you please poll the audience for questions? Thank you.
Yes, thank you, Matt. We will now be conducting a question and answer session. If you would like to ask a question, please press star one on your telephone keypad. A confirmation tone will indicate that your line is in the queue. You may press star two to remove yourself from the queue. For participants using speaker equipment, it may be necessary to pick up the handset before pressing the star keys. We ask that you please limit yourself to one question and one follow-up. Thank you. One moment, please, while we poll for questions. And the first question comes from the line of Thomas O'Malley with Barclays. Please proceed with your question.
Hey, thank you for taking my questions, and I appreciate it. Lisa, I wanted to start on the client business. So you had previously laid out a second half outlook that was roughly flattish with the first half as you're kind of protecting against some pull forward. So first, do you think that your Q2 results included some pull forwards and the second half should still be flattish? And longer term, after the Intel commentary regarding 18A, maybe what that means as a knee-jerk reaction just right away for AMD longer term in terms of share and ASPs?
Sure, Tom. Thanks for the question. So first of all, our client and gaming segment, and particularly our client business, just performed very well in the first half of the year. I think if you look at the entire first half, it was up 68% year over year. I think if you look underneath that, what we're seeing is strength in every part of our client business. So we saw very strong sales in our desktop channel area. We have a leadership product there, best gaming GPUs with our X3D GPUs. We've had strong Ryzen AI adoption as well in the first half of the year. We see that in sell-through. And in addition, we've had strong enterprise sell-through as we brought that forward. So to your question of how much is pulled forward, we don't think a whole lot of that is. We actually, when we look at the sell-through patterns, the end user consumption is actually quite strong for client. In terms of going into the second half of the year, as we said in our Q3 guide, the primary driver of our Q3 guide is a very strong data center driven by MI350 ramping. We are expecting some growth in the client business, so I wouldn't say it'll be flat to the first half, but it will be. We're planning for it to be a little bit less than seasonal. Just given some of the uncertainties out there. But the client business is performing extremely well for us. We believe we are gaining share in all the right places. So if you look at the numbers in the first quarter, and it'll show through in the second quarter as well, a lot of the uplift in revenue is in ASPs. And that is basically, we're selling up the stack on the strength of our portfolio. And I think we're still quite underrepresented in the enterprise portion of the business. That is where we have increased our go-to-market resources and focus, and we're seeing nice traction there, especially with the portfolios that we have from HP and Lenovo in enterprise PCs, and now we're adding Dell as well as it's ramping here. Started in the second quarter, we'll ramp more in the second half of the year. So I think all of those are tailwinds for our client business, beyond the second half of 25, but really into the next number of quarters as we think about the portfolio and the opportunities for us.
Super helpful. And then secondly, I was hopeful you could provide us a little more color on China. So the guide doesn't include MI308, but perhaps you could comment on when you get approval, if the supply chain's ready, what's currently in inventory, and maybe compare what you think the contribution will look like versus the $700 million in Q2 and the $800 million for the second half you spoke about in April.
Sure, Tom. So let me answer some of the questions on China. I'm sure that there are some questions. Look, we're very pleased with the progress that's been made with the administration over the last couple of months. We've been working very closely with the administration. I think the focus here on ensuring that U.S. technology gets utilized throughout the world is something that we certainly support and very much want to contribute to. China is an important market for us. Given the timing of licenses, we have a number of licenses that are under review now. We are working with the Department of Commerce to get those reviewed. We do expect that once those licenses are approved, we will start MI308 shipments. In terms of the supply chain, most of our inventory was not in finished goods, so it was work in process, and it'll take us a couple of quarters to run through that. The exact timing of revenue and contribution will depend a bit on when the licenses are actually granted. But overall, I think this is a better position than we were 90 days ago, and we certainly view China as a market that we would like to service with MI308. And we're working closely with the administration to do that.
And the next question comes from the line of Vivek Arya with Bank of America Securities. Please proceed with your question.
Thank you for taking my question. Lisa, if we look into 2026, right, that's when I think the sovereign opportunity could get quite meaningful for AMD. What is the right way to size that? What does this JV structure mean with some of the contracts that you have signed? And would you consider this incremental to the kind of growth rate that you're seeing with your current MI business, or would this be instead of? So just if you could give us a way to size what is that incremental opportunity from sovereign customers when it comes to 26, right? Is it dependent on a MI 400, right? In which case it might be more backup dated, etc. So just some ways to think about sovereign for AMD next year.
Yeah, absolutely, Vivek. Thanks for the question. So look, we're really excited about the overall AI opportunity for us with MI355 and the MI400 series as we go through the back half of this year and into 2026. I think it's there's a very large opportunity with, let's call it, hyperscalers, some of the leading AI companies, as well as sovereign. I think sovereign is additive to that for sure. From the standpoint of what to expect, there are also some regulatory things that need to be worked through on the sovereign side. But again, we're working closely with the administration as they go through the various regulatory decisions that need to be made. But from my perspective, I think the fact that countries want their own sovereign computing capability is very, very clear. I think we see that all over the world. The humane opportunity that you're referring to that we announced with the Kingdom of Saudi Arabia, I think is a great example of where, together with their ambitions, our technology, I think you heard from Tarek, he was at our event saying that would start with MI355, that we would expect that would continue on. I think what's attractive about our offering is our open ecosystem, and I think that really resonates with the sovereign community. But to your original question, I think it's an additive opportunity, and it's one that we believe will continue to be very important for us going forward with both MI355 as well as the MI400 series.
All right. And for my follow-up, I wanted to ask about gross margins for your MI product. So I understand in the early days, right, it has been dilutive. What kind of sales level is required for it to start becoming, additive to margins? And let's say if I fast forward to Q4 and assume that, your Q4 sales are growing year on year, roughly the same rate as Q3 sales, should we expect gross margins to kind of stay at these Q3 levels, or are there other plus minus drivers we should think about in terms of gross margins as you go into Q4? Thank you.
Yeah, Vivek, thank you for the question. The gross margin of our MI product, we said it's a little bit below corporate average. I think at this point, our priority is really to address the larger, faster growing revenue opportunities we have and provide customers a better TCO to really expand our presence in the marketplace. I think that the way to think about our gross margin, there are different dynamics, right? Different customers, different generations, but also our operation team has been continuing to really drive operational efficiency to improve our MI family's gross margin. That has been ongoing. So it's not necessarily really tied to, the revenue level each quarter, but you should think about it as a trend in the longer term. It should improve continually going forward. Overall, the way I think about it is gross margin dollars, right? This is one of the fastest growing market opportunities for any financial metrics. Gross margin dollars is what we try to grab as much as we can. Hopefully that helped your question.
And the next question comes from the line of Timothy Arcuri with UBS. Please proceed with your question.
Thanks a lot. Lisa, so my question is on data center GPU. You did say that June is up year over year, so it sounds like it's maybe a little more than $1 billion. And you use words like strong ramp into the back half of the year. Can you give us just any color on what that means? Can you get to, say, $7 billion for the year? And can you give us some maybe milepost on what you're assuming for Q3 would be great.
Yeah, thanks, Tim, for the question. I think what we said in the prepared remarks is that we are seeing a strong ramp from Q2 into Q3. MI355, we actually started production in June, so we had some shipments, in the month of June, but it really is ramping as we go through this quarter and the third quarter. So, in terms of guideposts, we said it would grow year on year. From last year, and that I think is a strong ramp, and then we would expect it to grow into the fourth quarter as well. The demand, I should say, what we're seeing from customers is I think really positive around MI355. Sort of the way I would contrast it with maybe the MI300 ramp. I think MI300 started with perhaps some smaller deployments. I think what we're seeing with MI355 is very competitive versus the B200, GB200 family of products. I think there's a strong desire to really use us at scale. The MI355 is very strong for inferencing. We're also working with a number of customers on training, and this is also an opportunity for us to build into the MI400 series as we go into 2026. So we're bullish on MI355 and where the AI opportunity is for us, and I think we're right on track to what we expected to be as we were going through the development of the roadmap.
Thanks a lot. And then Lisa, just on that point also, you did talk about a new developer cloud. So obviously you're beginning to lease back some of the capacity that you're selling into the clouds and the neo clouds. Is that going to be a material portion of the revenue you're going to recognize for MI355 in the back half of the year? Can you just talk about that and maybe how to think about how much demand that's going to stimulate and what the ultimate goal is for that cloud? Thanks.
Yeah, so there are a couple of things in that question, so let me answer. So the developer cloud is simply we want to make it super easy for developers to get on AMD Instinct GPUs. One could say, again, if we look back at the MI300 family, we were very focused on the largest hyperscalers and the largest customers, but there's a lot of interest in our GPUs, across a number of customers who just wanted easier access. And so by ensuring that developer cloud is there, that it has ready to deploy containers, you can run training and inference easily. You don't necessarily have to make longer term commitments. I think that's the purpose of the developer cloud. I don't think it adds meaningfully to revenue in the second half of the year, but it certainly adds to customers getting experience with AMD. I think the larger revenue opportunities for us are really with large customer adoption as they ramp to larger deployments, and we're very actively trying to get those deployments up and running as soon as possible. One of the things, just as a reminder, that the MI355 is, given that it's a similar infrastructure to MI300, we actually think it's going to ramp very quickly and very well for customers, and I think that's one of the attractive portions of it as well.
And the next question comes from the line of Ross Seymore with Deutsche Bank. Please proceed with your question.
Hi, thanks for letting me ask a question. Lisa, I want to go back to the Instinct side of things and the MI355 ramp. Looks like the second half is going to ramp really significantly. You said it's going to be up year over year in the third quarter. I believe a quarter ago you said roughly the same thing, and the MI308 is out of both numbers, so that shouldn't really matter, and I guess it would be upside. But I've just wondered, how have things changed from a quarter ago as far as the MI350 family adoption, especially because you launched a little bit early? Is the growth a little bit more than you would have expected a quarter ago, about the same, or a little worse? Just any sort of color on that would be helpful.
Yeah, Ross, thanks for the question. I think the main thing I would say is I think the adoption is a bit faster than we might have expected. Again, whenever you launch a product, we want to make sure that we go through the full validation and all of that with our customers. I think there's a lot of interest, broad-based interest in MI355, and so I feel like over the last 90 days, I think we've had significant sort of new customer interest, and that's certainly positive. I will say, oh, I'm sorry, Ross. I was just going to add, our engagements are. I think the other piece is I think there's also a lot of excitement around MI400 and what we can do with the Helios rack, and so there are a number of customers who, based on sort of the strong roadmap that we're showing, want to get, familiar and, really work with us, earlier in the life cycle, which, I think is again positive.
Great. Thank you for that. I guess as my follow-up, an earlier question, you talked about a little bit below seasonality in the second half of the year for your client business. It seems like there's just, I don't even know if seasonality is a framework that matters, but how are you thinking about that for the second half as a whole for a client? And then gaming was just up a huge amount sequentially in the second quarter. You described a little bit of what you're expecting there, but how do you think about seasonality for the second half in its entirety in the gaming side as well?
Yeah, let me try, and then Jean might add if you want a little bit more color. So the way to think about it is, we do expect some growth, sequential growth in client as we go into the third quarter. I would say, sort of, single digit, type growth. We continue to see good traction for our products and that portfolio. On the gaming side, I would call it flattish to Q2. And we're coming off of such a strong Q2 that I think flattish is actually to be expected. As we go into the fourth quarter, the dynamics that we would see is, we would see that the console business would actually be down substantially. So think about it as down strong double digits. The customers usually build for the holiday season sort of before that, and then that will be completed by the fourth quarter. So we would expect, as the client and gaming segment, that the segment would probably be down in the fourth quarter. So hopefully that helps. Jean, did you want to add to that?
No, I think you covered it.
Okay.
And the next question comes from the line of Joshua Buchalter with TD Cowen. Please proceed with your question.
Hey guys, thank you for taking my question. I wanted to ask about lead times on the Instinct family, both for the MI350 group family and MI400. I mean, as you move into larger cluster sizes, which it sounds like you're doing at least with Oracle on 350, and then endeavor to do more so on 400. How much visibility and lead time do you need from your customers? Because I would imagine the lead time for your parts is measured in months, but on the infrastructure side, in particular for the larger scale deployments, I mean, those things are measured in years at this point. So maybe you could speak to the visibility specifically on the 400. Thank you.
Yes, sure, Josh. So yes, I mean, our lead times are long, given all of the processing steps that we have to go through. Think about it as somewhere between 8-9 months, that type of thing. We have a very, very strong supply chain. We've been preparing for these ramps of both MI350 series and MI400 series, and that preparation is ongoing. So we feel like we have a very strong supply chain there. In terms of visibility with customers, we're absolutely working with customers very closely on near term MI350 series deployments, getting those deployments up as quickly as possible. Again, one of the things about the MI350 series that is good is that it can go into existing data centers, given just given the platform that is in. So, we have been certainly working with our customers there. And then for the MI400 series, there are lots and lots of details in sort of full rack scale design implementation, and we're actively working with the largest customers right now on just ensuring that our Helios rack is fully compatible with their data center build outs as we go into 2026. So that visibility is important. I think that co-development, co-engineering is important as we get into the rack scale architecture, and the ZT team that we've brought in has been extremely, extremely helpful in terms of both internal platform build out, as well as ensuring that we're working closely with our customers on their data center needs.
Thank you for that, Lisa. And maybe for Jean, I wanted to follow up on Vivek's question earlier on gross margins. So if we add back the charges in 2Q, and then your gross margin implied in the guidance is roughly flat sequentially, and that's despite what's implied to be data center GPUs up meaningfully sequentially. Like, it doesn't seem like consoles falling off in the third quarter. I mean, can you maybe talk to the underlying drivers of how your able to keep the flat gross margins despite, what sounds like still margin dilutive data center GPUs up significantly within the mix? Thank you.
Yeah, Josh, thanks for the question. Yeah, we are guiding our Q3 gross margin around 54%, and Q2, you're right, excluding the 800 million charge, it was close to 54%. I think the gaming business actually is quite high, so the mix actually is unfavorable. But we do have some tailwinds we have been really driving. First is, we have been expanding our server business, which has a really nice gross margin. And on the client business side, we are expanding the commercial PC business. So that really helps us to drive the gross margin up. In addition, we do have a really strong operational team. They are driving the gross margin improvement just from operational efficiency perspective across the board. So overall, our objective is to continue to improve gross margin despite, MI350 very strong ramp in Q3. We are able to continue to drive the margin up.
And the next question comes from the line of Joe Moore with Morgan Stanley. Please proceed with your question.
Great, thank you. You've used this language before of the kind of tens of billions opportunity around MI400. Can you talk about, that the time frame when that might occur, and not to pin you down too much, but and what what would help you get to that level sooner rather than later? Should we think of that as a 2027 realistic outcome that you could be looking at 20 billion plus? Just a little bit more color on that tens of billions comment.
Yeah, I mean, maybe without being specific, Joe, I can give you sort of the way I look at it, and back to this notion of are we incrementally more confident? I think we're seeing a lot of positive signs in our AI customer adoption. I think the strength of the MI350 series, the very positive feedback that we're getting on MI400 from customers, the work that we're doing in terms of ensuring that we are fully ready for large-scale deployments of not just inference but training. I think when we get to tens of billions of dollars, we're talking about significant gigawatt scale type deployments, and those would be important for us to get there. And we're certainly, I think, engaged with all of the right customers that can enable that type of ramp. But I won't necessarily speculate on the exact time, other than to say, certainly that would be our set of aspirations.
Great, that's helpful. Thank you. And then as these workloads evolve, I mean, you've sort of talked about inference and training as sort of different opportunities for AMD. Are you seeing those start to come together? It seems like with inference, the reasoning models are requiring much higher complexity. Is rack scale more important to the inference market than you thought it might be? Just any color around how that complexity of inference is impacting you guys.
Yeah, I think that's absolutely true, Joe. I think with the proliferation of models, I think what we're seeing is GPUs continue to be very sort of the computing of choice as you think about all the models that are out there, and then as you go into distributed inference and some of the newer techniques, we are seeing the importance of the scale up and the scale out architecture, which we are investing in. But I think the overarching thing is I think we have a very competitive roadmap across the next couple of generations. I think that has now gotten strong customer validation. We're getting a lot of feedback from customers on where they would like to see us continue to add more resources and add more focus. And so that is very helpful. And the key is to be a full scale solution provider for these large customer deployments, and that's what we're working on.
And the next question comes from the line of Aaron Rakers with Wells Fargo. Please proceed with your question.
Yeah, thanks for taking the question. I do have a follow-up as well. I guess the first question is, when we look at the data center guide, Jean, you alluded to double-digit sequential growth. Obviously, the MI 355 series kind of ramping. I'm curious, how could we conceptualize what you're expecting in the server side, and where do you think your market share is today in traditional enterprise servers outside of cloud?
Yeah, I think when you look at our data center business, we do have a strong double-digit growth. Both server and MI, both sides are growing sequentially. Of course, MI ramp is the most significant one. As far as the server market share, we do think we continue to drive the market share up compared to Q1. It's not a third party has not published a report yet, but we feel really good about the Q2 market share increase versus Q1.
Aaron, if I just add to that, one of the things that it's important for people to understand is, in some of the cloud CapEx numbers that have come out that have been, quite positive, that is not only a GPU statement, but there's actually, significant CPU CapEx in there as well. We've started to see, more, robust forecasts going out a number of quarters on the server CPU side, because all of that AI content, really requires, traditional, CPUs, as well. And so we're very bullish on the opportunity in servers. I think the team has really executed extremely well. I mean, if you look at our portfolio now, Turin and Genoa are very well adopted, broadening workloads. Enterprise adoption is also increasing, and so I think all of those are positive for the server opportunity in the second half of 25, as well as going into 26 and beyond.
Yeah. And then as a follow-up, I'm kind of thinking about the China, the MI308 opportunity. When we do see a license, I think you alluded to this earlier, it's going to take a little bit of time to kind of ramp and get the supply chain to satisfy the demand. But I'm curious, the $800 million, write down that you had taken, is there no kind of finished inventory there? Does that come back? Do you have any reversal aspects of that once a license gets approved?
Let me start first, then Lisa can add. First, on the 800 million, majority of them are WIPs. We really don't have the on-the-shelf finished good we can ship immediately. So we do need to take time if we get a license.
Yeah, I think so.
And the next question comes from the line of C.J. Muse with Cantor Fitzgerald. Please proceed with your question.
Yeah, good afternoon. Thank you for taking the question. I guess Lisa was hoping you could level set us on the Instinct ramp into 2026. How are you thinking about the timing of the handoff 350 to 400? How are you thinking about Helios contributions? And I guess very importantly, from a customer contribution perspective, how you might see that evolve, from traditional hyperscalers to perhaps more sovereign and neo cloud within the mix.
Sure, CJ. So certainly as second half this year, it's all about MI355 ramp into first half of next year. I think the MI400 series development is right on track. The development of the Helios platform is also right on track. We would expect significant revenue contribution from Helios in 2026. And then relative to the contribution of the various things, hyperscalers, sort of some of the, versus neo clouds versus sovereign. I think it's a little early to really talk about the different pieces, other than to say, you would expect that, hyperscalers and let's call it, neo clouds that would be working for other large AI natives, maybe significant pieces of the initial ramp. And then, sovereign may come a little bit later in time, just given, sort of the timing of when different build outs would happen. So hopefully that gives you some color, CJ.
Yeah, very helpful. And then Jean, I guess a question for you with the sale of ZT for $3 billion in cash and stock, and you only have $3 billion of debt outstanding. How are you thinking about the use of proceeds? Is there, saving for a rainy day or bolt-on acquisitions, perhaps more aggressive share buyback? How are you thinking about it today?
Yeah, thanks for the question. Our business model actually generates a lot of free cash flow. As you see in Q2, free cash flow generation was $1.2 billion. So if we close the ZT sale and we'll get more cash, overall our capital allocation principle continue to be the first thing is investing, especially with the tremendous AI opportunities ahead of us. And then we'll continue to return cash to shareholders. We did a $1.2 billion repurchase in the first half of the year, we are committed to continue to return cash to shareholders through share repurchase.
Operator, I think we have time for one more caller, please.
Okay. The final question comes from the line of Ben Reitzes with Melius Research. Please proceed with your question.
Hey, thanks for squeaking me in here. I wanted to clarify a little bit on the $1 billion increase in sequential sales. It would seem like it's coming from GPUs primarily. I was wondering if you could back that, and that's with nothing in China. And if the answer to the prior question that GPUs are over $1 billion, that kind of puts you at a $2 billion run rate. And was just wondering if that was, accurate in terms of thinking. And then I have just a very quick follow-up. Thanks.
Hi, Ben. Thanks for the question. If you look at the sequential revenue increase, as I mentioned during the prepared remarks, we see data center strong double-digit increase, which include both the GPU and the CPU, but the GPU definitely drives the largest incremental amount increase. We also mentioned the client actually is going to increase sequentially. In addition, the embedded business will return to sequential growth. So multiple businesses contributed to sequential increase, but the majority of increase is really driven by MI355 with a strong ramp.
Okay, great. And then if indeed, that gets you pretty close to a couple $1 billion, if the MI300 comes in, do you see it at the same run rate, that you exited, and then you have the ability to, get at that 800 mil run rate right away, or you think it'll take several quarters to ramp when you get the license? Thanks.
Yeah, Ben, it will take some time to ramp, just given, and particularly today. I mean, we're sitting already in early August, so I don't think you would see a lot of it in Q3. But certainly, as licenses would be approved, we would schedule that, and it would take a little while to ramp.
And ladies
All right,
and gentlemen,
operator, thank you very much. We appreciate everybody that joined the call today, and we just like to end the call now. Thank you.
And we would just like to end the call now. Thank you. Overall, I mean, I thought we were getting a recovery there. If you guys are long-term shareholders of AMD, I don't think there was too many terrible things. There were some not so great answers, some dodging of answers, but the quarter that we saw itself and the guidance speaks for itself. Okay. In my opinion, it seems like it should be a flat quarter. There was some good news. There was some non-answers, which leads to some analysts being, or analysts that could speculate on whether we are going to see these multi-billion dollar increases in revenue over time for AI data center expansion for their MI400s. But yeah, I need to learn more about this name. AMD is very exciting. I understand that a sell-off like this can lead people to think that management is either doing a good or a bad thing, but we have to remember, this is not what they're designed to do, is answer calls on a quest or answer questions on a singular call. They're there to manage the business, find new partners that are going to set up, like she said, multi-gigawatt data centers. If you can land one single partnership with a large customer like a Meta or a Google or something like this, this can completely change the trajectory of the future business that you have. So that is what, AMD is striving for. Anyone that's saying that this is dead or that Lisa Su is doing the wrong thing or anything like that, I think is a little bit misguided. Obviously, she could have given some better answers to some questions, I think, analysts do not like uncertainty. They want clarity. So the better clarity that you can give them, especially bullish clarity, however, sometimes you can't always give bullish clarity, that's obviously going to be better for the stock. Now, ladies and gentlemen, I have another live stream after this to talk about other news that has happened in the market, break down other companies other than AMD. If you guys are interested in those live streams and the other videos that I post, consider hitting the subscribe button. We do similar breakdowns like this in morning earnings and after close earnings, do recaps after that around 7 p.m. Eastern Standard Time or even 8 p.m. depending on how much time it takes me to get ready for that show. But aside from that, that's all I have to offer you guys today. No other, sponsorships or anything like that. Just subscribe. Thank you. Hopefully, we have some long-term investors in here that can handle a little bit of volatility, but that's what happens in markets. Until next time. Bye for now.